The 91 Infrastructure Forum serves as a crucial platform for stakeholders to discuss innovative solutions and strategies aimed at addressing African infrastructure challenges and fostering sustainable development and investment. This afternoon at the 2024 edition, I sat down with the Executive Director of the Namibian Ministry of Finance and Public Enterprises and asked him what is responsible for the gap in underinvestment in Namibia's infrastructure. Here's that conversation.
In fact, all African countries, especially in sub-Saharan Africa, there's a huge underinvestment in infrastructure. So especially on the economic and also social infrastructure. So in Namibia, there's no exception. So for instance, we have costed our National Development Plan, which is just basically ended recently. And we realized that if you take into account what government put into infrastructure, we actually had a deficit of close to 30 billion. That was like up to last year. And given the newer demand, especially now coming from the oil discovery and the green hydrogen, that is actually increased exponentially. And we're talking about 30 billion, now it could have gone to 50 billion, and the number keep on increasing every day. So it's quite significant, and we really have to collaborate and have partnership with the private sector to help us basically to close that gap.
Well, actually, that underinvestment, where is it coming from mostly? Is it coming from government or is it coming from private sector? And in that, what are you doing to ease the private sector participation in that infrastructure investment?
So it is generally an inherent thing for Africa. All African countries, you hardly find a country investing at least 10% of their income in infrastructure development. So you have Botswana now, I think they've been investing close to 8%, they're one of the highest. But you can see the front runners, which are actually growing fast in the world, like India and China. They're investing so heavily in that. So it's actually everyone. And therefore, what we are doing from our side, we are trying to make regulatory, administratively, and any other institutional reform, which are basically necessary to ease and actually incentivize private sector to come in. Some of the regulation we have, there are some bottlenecks, and for instance, some cases one can take up to 30 days to register a company, or triple P arrangement, which we have currently as well. We come up with new regulations. We're also trying to revamp actually the procurement system overall to make it easier and basically improve the turnaround times. But overall, I think we're just making it worth for money. Actually for private sector to come in.
If I heard correctly, there seems to be a gap in investing in rail infrastructure where the focus has been more on road, if I did hear correctly. And I'm wondering why that has been, and also what gap that has created in terms of rail, and also maybe the impact that it has on regional trade.
Oh, okay. I think they maybe have 2 or 3 critical underlying reasons why that's the case. We have fast urbanization taking place. We have aging infrastructure. And for economic reasons as well, I was talking about new industries and so forth. Those are the contributing factor. But it's not like government did not want or was not willing. We tried the best we can, but fiscal constraint, which we've been experiencing, I think all countries have had a similar experience. It was actually not easy. Otherwise, you're going to actually, basically break the bank, which we not actually want to do. So there's still space. And what we are saying is we've costed everything which the country needs really to fulfill its full potential. And in doing so, we need the private sector. No country in the world which actually government does everything. For the core and hardcore infrastructure, like your road, your railway, where there's no maybe return for the private sector. Government have no choice but to do it. Also in the social health and etc. But the other ones, which you can collaborate with the private sector, and we know there's earning, there's money for them to make, we definitely are keen to collaborate with them.
I mean, just also talking about trade with your trade partners, ports are also very important in that. Of course, in South Africa, we are no stranger to infrastructure failures in ports and, and all those constraints. What is it looking like in Namibia?
So you mean for trade facilitation particularly? So that has been a problem. And intra-African trade, as you know, empirical evidence shows us that it's been very, very bad. Between Namibia and South Africa and maybe neighbor Botswana, So South Africa is our largest trading partner because the basic things I think have been resolved a long time ago. But African countries, it's actually been not very easy. So that's why you have African Continental Free Trade Agreements, which is in place. And now as SACU, we're basically trying to penetrate that. We're just trying to work out few issues which we believe is actually going to ease the penetration. But we should also remember most of these countries, including Namibia, where we are generally the primary sector. We're basically just resource driven, but we are not basically adding value. It's also very critical for us to facilitate trade that will also enable ourselves to add value and sell finished product to the rest of Africa. Because I can't sell diamond to Botswana, I must be able to sell jewelry and so forth. That's one critical factor which will enable trade and remove all other barriers which might be there.
Let's talk about electricity infrastructure, because also another challenge that we are very familiar with in South Africa. In terms of Namibia, I think you said that half of the electricity that is consumed is imported. What is your focus there in terms of infrastructure investment, and also where are you looking between coal versus renewable energy?
Yeah, electricity generation has been a big challenge, not only for Namibia, I think for the whole region. And you rightly said we are importing actually almost half, depending. But what we have done, we have a national integrated resource plan, which is actually putting forth the type of investment we need to do, both in generation and transmission, to ensure that we are self-reliant. And we're also doing that, of course, in collaboration with our neighbors. We don't generally have to produce everything, but we have the capacity and the huge potential, especially the green hydrogen now, which you also expected to produce a lot of that. But renewables, the solars, the wind, and also biomass now, we also have those as a priority for us to move in, and we're expecting really some of those to come on board very, very soon. And it will enable Namibia basically to generate excess capacity which will be able to supply to the Southern Africa power pool.
All right, just to wrap up the conversation, what other priorities do you have in terms of investing in infrastructure, the specific sectors that you are concentrating on?
So, of course, health. Health is very, very important. And health, of course, maybe is more bound in Namibia, but of course it also will benefit the region. But we have to make sure that we invest in those necessary social infrastructure which will really have a positive impact to the well-being of our people. So therefore is in health, is in water, for instance. Water, Namibia being arid, dry and very arid country, so there's a problem, drought now. We are trying really to accelerate investment in water as well. ICT, talking about access to digitalization, access to that is very, very critical. We are really trying to cover all those critical infrastructure beside the hardcore and the one which is necessary for economic growth and development.
That was the Executive Director of the Namibian Ministry of Finance and Public Enterprises, Titus Ndove.